The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, as we headed into the 3-day Memorial Day weekend, we saw a pretty solid day across the grain and oilseed trade with good strength in Kansas City and Minneapolis wheat futures, along with soybeans and soybean meal, relatively firm in corn and Chicago wheat, and somewhat mixed in the livestock trade heading into the weekend. Joining us now for a conversation as we take a look back at the week in the market trade, and as we near the end of the month of May, we welcome back to Market Talk Bryan Irey with Crossroads Coop joining us here today. Bryan, it's good to talk with you again. How are things out in your neck of the woods there in the Western Corn Belt?
Well, thanks for having me back, and things are in pretty good shape out here. I think we should have most of the corn in the ground after this week. It has been a little wet in eastern Colorado this week, combined with some volatile weather, but I think we're off to a good start. They say rain makes grain, and I haven't heard anybody complain about the water, and we still have a little time out here to get corn in the ground, so headed down the right path anyway.
Well, I definitely think that's good to hear. I think weather is kind of our big storyline here, especially as we head into the weekend and wrapped up the trade on Friday. Just not much in the way of other fresh news, and it's really global weather. We talk about maybe some planting delays in the U.S. I know, for instance, Iowa's really gotten hammered with rain this week. Eastern Corn Belt, though, might have caught up, but then also the global weather concerns. It felt like that there was some momentum across the grain trade Friday, but yet a lot of folks didn't want to get too ahead of themselves heading into a 3-day weekend, Bryan.
Yeah, absolutely. I could not agree with your assessment anymore. I feel like that's really where we are. That session on Monday night could be very interesting. We're starting to see trade estimates at 85% planted for next Tuesday's report. And I guess I am not 100% sure whether they, when they do that survey, I'm sure it's probably at the same time that we'll get the report on Tuesday, but it will be the same as the Monday report. But at 85%, we actually gain a little ground on the week. And it has felt like, listening to our sources in the Midwest, that that could very well be the case. We could be all of 85% planted, if not just a little more. And I think the trade in general was unwilling to go long into the weekend in light of that fact.
Well, seasonally, we're in that window where we can see a rally in the grain markets. I feel like kind of that window from mid-May to sometime near the 4th of July is typically we kind of play this weather market through planting and things like that. And I feel like that's kind of the case right now. We're just maybe not enough of a story to move us past some key resistance points. I think, lead month beans, $12.50, July Chicago wheat, that $7 mark. On the corn side, kind of that $4.75 mark in July corn, things like that. It feels like we need something else to get us through some of this overhead resistance here if we want to continue a weather-related rally, Bryan.
I would agree with you. And I think that you've got a couple of things that support that theory, and that is you still have the question of 90 million acres, and do we get some prevent plant in certain states that bring that number down lower? I mean, I've seen some numbers as low as 87 million by Nutrien this week. I think that's probably an extreme. You have as we've been talking, the wet weather, maybe even in the Corn Belt, we get a few less acres. And that's assuming that the USDA was right with the 90 million number. And I think there's still some in the trade that feel like that number could be 91.5. I don't think it's at 92 at this point. And honestly, bean economics aren't terrible with beans at, where are we, 11? Are we closed at 12.20 here tonight in November beans? So you could see some acres get shifted if the chemical hasn't been or doesn't become an issue, it's certainly possible we see some acres shift, but I don't think it's in a big way. But overall, I think that 90 million number that the USDA is using is what the trade is going to trade here moving forward, and it puts a floor under the market, I think, for the foreseeable future until we get a little clearer idea on what production actually looks like. And it's going to be, as you mentioned, late June before we get an idea. But I think all you have to do is go back to 2019, and rain makes grain, like I said earlier, and I think that we're probably not in a horrible situation, especially in light of the fact that some forecasts are putting heat and dryness in the forecast for the latter part of the crop development period.
Well, heat and dryness, I know we're seeing that overseas, southern Russia, the Black Sea region. That's been a big driver in this wheat market and the kind of the wheat-led rally that we've had here as of late. And I know Kansas City and Minneapolis futures had the better day on Friday. Chicago kind of caught some of the intermarket spreading there, it looked like, on the day, and some of that resistance at $7 in July futures for Chicago. I mean, talk about this wheat-led rally. I know the Kansas crop, the wheat tour, for the most part, things look good. We're getting harvest started in Texas. Spring wheat planting's been well ahead of the average pace. And then you throw in the global weather concerns. There's a lot to like in this wheat trade right now, Bryan.
Yeah, there is. And it's an interesting situation, too, because I think you can throw Australia in there, too, as far as drought goes. But you definitely have a variety of issues with Ukraine dry, Russia dry to an extent still, and freeze damage in Russia that has put a cap on what their potential is. And even ICAR lowered their crop production numbers this week, and as well as their export numbers. So they're probably not going to be as big a player in the wheat market, Russia, and in the coming year. But it's interesting. I think there's the one dilemma is the United States stands to pick up very, very little export business if there is a shortfall in Russia, unless it is just way worse than what we're led to believe today. So you've got fund buying here in especially Kansas City wheat, and as you mentioned, we've seen it in Chicago as well. But we're pricing the U.S. crop out of the global market here in the short term, and I'm afraid what ends up happening is one of two things is going to occur, and it's either the wheat market stays firm in terms of the futures, and we see basis widen out as harvest rolls along here, or we see the board come back down to what an accurate reflection of cash prices are. And it ends up hurting the producer, I think, in the long run in terms of flat price. But we still have very, very comfortable balance sheets in the U.S., especially with hard red winter. There is some talk, too, around fumonisin in the soft red crop. And I don't know, we'll know more about that as time goes on here, whether that is a problem at harvest time or not. But definitely the hard red winter crop is going to be adequate. We just keep hearing better yields in Oklahoma, better yields in Texas. And I think they're even going to find that in parts of Kansas as harvest progresses, with probably the exception of the southwest part of the state.
Bryan Irey with Crossroads Co-op joining us here today on Market Talk as we continue to recap the week of the trade. And of course, Memorial Day Monday, no markets. So we'll have a 3-day weekend to digest what's going on here. And real quick for the grains here, Bryan, before we go to livestock, just to think about risk management. I know from your perspective, looking at what's been moving from farmers selling point of views and end users, et cetera. I mean, you look at, for instance, corn, 488 and a quarter, D's corn at the close for new crop, July 464 on Friday. Beans again, kind of getting up there against resistance in the wheat trade too. Some of it you mentioned kind of pricing ourselves out of the world market, but good prices for U.S. producers. I guess risk management wise here, what should a producer be thinking about across this grain trade as we head to the end of the month of May and look to get into the month of June?
Jesse, I still think that layering in offers in the futures makes the most sense. You touched on us being back up against some resistance here, especially on the corn side. I think that it is not inconceivable that we don't go back and take the highs out that were made here earlier in May. I don't think it's inconceivable by any stretch of the imagination for that to happen, especially if wheat continues to run. I think you'll find fun buying across the complex that will run us higher. But I think just getting incremental orders in and having them rest there to see if you can get them filled here over the next 3 to 4 weeks. If they don't fill, I think that you got to stand back and reassess where you are, kind of read and react, if you will, and maybe market a little more grain in a lump sum here, because long term, we still have a big corn crop in South America, and I feel like that's going to probably continue to grow. And that is going to pressure us here in the last part of the marketing year. I just don't think it's inconceivable that you see D's corn sub 450 when harvest gets here without a significant weather problem in the U.S. I think the USDA probably has us a little bit overstated on exports for next year, given the fact that China just has not been in the picture, and there's no sign that they're going to be. And if we continue to, if Ukraine is capable of continuing to ship corn out of the country, we obviously have a lot of competition from South America there as well. And on the wheat side, I think it's even tougher. I think that you really do run the risk of basis weakening here. You run the risk of futures selling off at some point. And I really like the idea of just getting futures contracts done, just doing a pure HTA on risk management for wheat. And again, kind of layering those in, because that, we were $1.55 higher, I think, since April 17th in Kansas City, July wheat, since this rally started. You want to continue to try to take advantage of that, but sooner or later it will run its course. And when it does, I'm afraid the sell-off could be very, very rapid and very, very volatile.
All right. Good thoughts in grains. Let's talk livestock. Cattle futures were kind of weak on Friday, headed into the weekend. I have to think you and I are talking before we both see the cattle on feed numbers. I have to think that was maybe some positioning. Cash trade, though, for cattle has been a bit firmer here this week, and I know we're still seeing some cleanup for that on Friday afternoon as well. But your assessment of the cattle market trade here as of late, Bryan, what are your thoughts as we've seen a bit of a rally?
Yeah, we have, and I think a lot of that has had to do with numbers are just down. They're just down. A lot of the yards that we deal with here in Weld County in Colorado are owned by the largest cattle feeder in the world, and they just have a fraction of their capacity filled. And you would see that generally across the board here with the feeders that tend to be a little more conservative. You have a few of the guys out here that are riverboat gamblers that I think that have paid up for feeders, and they're going to try to ride the crest of this thing. But I think overall, cattle are going to the market heavier. I think that is absolutely one of the things that we're seeing going on, and we have people, feedlots telling us that that's what they're doing. Replacements are the big question, and I think we start to get some answers from today's cattle on feed report, as you mentioned, that will be released here at 2 p.m. Mountain Time. And I think it's a battle we're going to fight here throughout the rest of the summer. We just don't know where these replacements are coming from. It feels like, with some of the information I've read, a few more cattle are bleeding across the border from Mexico, probably not from Canada. but that has helped keep the numbers where they are for today. But it just sounds like once we get past June that it becomes very, very difficult, which not only is going to likely run the feeder market higher, it's probably going to have feedlot operators holding on to fat cattle a little longer to see if they can milk that last little bit out of them. Like you said, trade cleaning up today. And you got to wonder what it does for corn demand too, because it just can't be good.
I was going to ask you, I mean, feedlots, you look at the price of corn, if feeders continue to rally, I mean, should we be locking in some of those feed needs? I can't imagine that wheat's going to find its way into the feed bunk here with the price of wheat. I'd have to think it's mainly going to be corn. I don't know. What's your thoughts on the feed side of the equation?
I think that, wheat definitely does not get in. In fact, we're even hearing rumors this week of corn replacing some wheat on a global basis in feed rations too. I think that is very real, which could cut our exports farther in corn as we move throughout the marketing year. But to me, it's a big deal. I think that even clear down to the dry distillers grains and wet distillers grains demand, I think it's going to have an impact on us. The one thing that could change that a little bit is maybe you start to see cattle come into the yards early if we do get a hot summer here and grass begins to disappear. But I think overall, it's a situation that you need to keep a close eye on. You really do. And I think just one more point on the beef side of things. I have a good friend in Memphis that is an analyst in the cattle industry, and he feels like we continue to see some Australian beef and New Zealand beef working its way into the U.S., potentially keeping a cap on this cattle situation. I think that's something to keep an eye on. And then I kind of skipped over your question, but as far as new crop corn, I just don't see feeders stepping out until they have a clear idea on what it's going to cost in terms of feeder cattle. I think that they know that corn basis should be cheaper in the fall. And if we do happen to end up with a crop that's 14.8 billion, 14.9 billion, somewhere in that area, that not only does basis slide, the board slides lower well, and they're probably going to be content to wait here for a minute.
Well, I think the other final leg of this protein sector stool for me, whether we're talking beef or pork or chicken or whatever, is overall retail demand. Exports were all right here this week, but just the overall economy here as we get into the summer grilling season, hot and heavy. I think that's a big thing that's going to be on my mind really across the protein sector, Bryan.
Yeah, it absolutely is. And you start looking at inflation and, it may be cooling off a little bit, but when you look at the inflation for the last 2 years combined, those numbers are just astronomical, and it is having an impact on demand. And I think it will continue to have an impact on demand as we move forward. Wages just aren't keeping up with costs, and I think it's one of the reasons that the government's hesitant to go in and begin cutting interest rates, which everybody's obviously watching closely. But I could not agree more with you in terms of demand. I think consumer demand is going to continue to be lower. People are going to opt for cheaper cuts, whether it's poultry or pork or whatever the case may be.
Bryan, always enjoy the conversation. Anything final, real quick, you want to mention or reiterate to folks listening in here today?
Thank a veteran.
I agree.
That's all. I think that's a good way to end up here. They thank those that are among us, and don't forget those who aren't.
Yeah, definitely think about those folks who paid that ultimate sacrifice for our freedom. That is for sure. Bryan Irey with Crossroads Co-op. Bryan, thank you for joining us here on Market Talk again. Have a great weekend. We will talk to you again real soon.
Thanks for having me, Jesse.
That's going to do it for Market Talk. Find us at markettalkag.com. I'm Jesse Allen. Have a great afternoon.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@markettalkag and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.